Today, we are picking a stock in the sugar space. On Monday last week, this Kolkata-based company announced a 2,000 crore project to build the first ever industrial bioplastic plant in India. On Wednesday last week, the Cabinet Committee of Economic Affairs approved a fair and remunerative price (FRP) of sugarcane for the sugar season of 2024-2025 at Rs 340 per quintal. This price hike of nearly 8% from last year is going to increase the input cost for sugar manufacturers, and government does not provide any financial assistance to them. Will this firm continue to be profitable and grow? चलिए जानते हैं. तो शुरू करते हैं एक अनबायस्ड कवरेज जस्ट बेस्ड ऑन फैक्ट्स on one of the multi-product integrated sugar firms, Balrampur Chini Mills Limited. My name is Ashish Thomas. I'm an IIM graduate and a management consultant. My daily job is to evaluate firms, understand their risk, and anticipate market moves. And I thought, why not apply all of that to the stock market? So here we are, and let's jump right in. This is the agenda for today. We begin with an industry analysis and then move on to the business model. Then we take a quick peek under the hood on its financials. फिर इस कंपनी के रिस्क देखेंगे, and finally the valuations. With that, let's dive into the understand the winds of change in the industry. India is the second largest producer and the largest consumer of sugar in the world. The market is expected to grow at 6.9% CAGR till 2028. It was also the third largest exporter of sugar globally, but only 30% of what the largest exporter Brazil exported in 2023. However, the Indian production is expected to decline by 10% owing to the drought in Maharashtra and Karnataka, which accounts for nearly 30 to 40% of Indian production. While it is anticipated that India will not export sugar this year, importing sugar will put a huge fiscal pressure on already stressed Indian budget. And finally, India एक 20% ethanol का blend करने की कोशिश कर रही है with gasoline by 2025. तो ये एक अच्छा revenue है for diversifying the revenue of sugar companies. Now there are four main market drivers which are important to take note. पहला fluctuating oil prices हैं. जैसे ही oil price का increase होता है, ethanol का production ज़्यादा किया जाता है for blending purposes. Market में awareness बढ़ रहा है around sugar and sugar के substitutes ढूंढे जा रहे हैं. पर जो processed food का consumption increase हुआ है, वहाँ पे तो sugar का used as preservative. So this is almost like a balancing act which is happening. In addition, bioplastic is becoming popular by Indian government because of they're slowly banning the single-use plastic. The bioplastic market is expected to grow at 13% CAGR, and it's all mainly made out of sugar. Finally, there's an increased use of sugar in pharma and personal care products due to the calls for natural ingredients over the chemical ones. So there's a lot of different areas of demand that is emerging for sugar in the market today. Here's a view with the largest sugar producing companies in India. Based on the market cap, EID Perry is the largest. So in terms of capacity, Renuka is India's largest sugar and ethanol producer, closely followed by Bajaj Hindustan in the sugar category and Balrampur Chini in the ethanol category. With that, let's move to our next section. We'll begin with taking a glance on the highlights of the firm and understanding the competitive edge. Uske baad, we are going to see what are the big news in the market that the firm is making or firm is getting impacted with. Balrampur Chini has 50 years of experience in manufacturing ethanol and sugar. वो अपने बाई-प्रोडक्ट से हाई पोटैश फर्टिलाइजर बनाते हैं and they also sell electricity through batteries. उनके 5 ethanol के distilleries हैं with a capacity of 1.5 kiloliters. They operate 10 sugar units with 80,000 daily cane crushing capacity. In context, largest player Renuka has 1.36 lakh daily capacity, and the next in line, the largest market cap EID Perry is only 40,000. And finally, in terms of the revenue split, 82% revenue comes from the sugar business and 17.5% comes from the distillery business. In terms of what is giving Balrampur a competitive edge in the market, the backward integration is really helping right now. They have become crop influencers through their cane development program where they guide farmers on sugarcane variants to plant, efficiently use water and update them about weather changes. It's almost like making a captive sugarcane farmer market. Developing India's first bioplastic plant can be game changer for two reasons. First, there's forward integration, so another way to diversify its revenues through sugar. Second, government is really keen on reducing the consumption of the single plastic usage. While the price of bioplastic is double the conventional plastic, but in case government actually ends up banning, which it's slowly doing right now, the price would be irrelevant because consumers को bioplastic ही खरीदना पड़ेगा. It's also diversifying revenue and minimizing production costs by generating its own electricity and exporting all the excess. Nearly 45% is being exported in the free market. So that's giving them the sugar moat, as we call it in the industry. Finally, there are two major areas that are going for Balrampur in the market. The Cabinet Committee approved the FRP at 340 rupees per quintal at a sugar recovery rate of 10.25%. Now do keep in mind the recovery rate is nothing but the amount of sugar which has been obtained from sugarcane. Balrampur Chini is only at 9.43% recovery rate, and government has included a clause that there's a penalty of 3 rupees for every reduction of 0.1% recovery rate. So given that difference which Balrampur is at and the recovery rate which has been pegged, this increase may not truly impact Balrampur Chini at immediate basis. The second one is the firm acquired a minority stake in Konkan Specialty, which uses PLA to produce further complex products. Now keep in mind that before the production of PLA has started, there's already demand which is there in the market. So there's a very clear revenue visibility for the new plant which is there. With that, let's look at the financials of the company. Numbers don't lie. And before we go there, आपने काफी सारे stock videos देखे होंगे, but very few are going into the depth like we are going today. So please go like the video if you haven't already and do subscribe. वहाँ bell icon होगा, वहाँ पे all notifications click कीजिएगा so that you're up to date on all the videos that I produce. I'll be launching a new company analysis every 3 days and we have 2000 stocks and only 365 days. So content तो काफी आने वाला है. Some typing and quick search later. We're going to use December 2023 updated numbers for this analysis. Balramp's revenue grew by 27% from last year because of the increased production of ethanol and sugar capacity. EBITDA margin and net income both improved due to the higher sales in the last one. So really good numbers to begin with. On the operational front, operating cash flow reduced हुआ है because of the lower sales in the previous season of 2022-2023. The way this industry works is the cash flow gets impacted in the next few quarters. So that's the reason why the operating cash flow is still decreasing. On the Capex front, company undertook a massive distillery expansion program from 560 kiloliters to 1050 kiloliters with the capital outlay of 615 crores. It also incurred a 363 crores of modernization of its sugar infrastructure and commissioned a refinery at 2 locations. So net, all this Capex was used to improve and modernize production, which is getting reflected in the latest earnings. And these efficiencies are still going to flow in. Free cash flow is negative and nearly 40-45% of the Capex was actually funded by the available cash. So it's expected that the free cash flow to reduce. They have a net debt of 6 billion rupees and are actually committed to paying it back to reduce it, as they have paid 1 billion rupees already back this year. The ratios are really healthy when compared against the industry. It has a low debt to equity ratio, which means it can get more funding for any kind of expenditure which is there. Its return on capital employed is higher than the industry median, ensuring efficient processes. Interest coverage ratio is at 11%, ensuring that they can repay back the interest incurred and some more this year. If you look at the equity research analysts, their prediction is that share price is going to grow by 28%. Its revenue growth is expected at 15% and the return on equity to touch 18%, which really makes it a good comparable investment. Analysts are very bullish about the company's focus on efficiency, revenue diversification, and proactively reducing debt. The company has already announced 6 buybacks in the last 6 years, ensuring that the shareholder value is always maximized. So that's why they're all bullish about the share. Final note on the ownership, the holding pattern is really stable and there's no insider buying or selling, which is a really good. Insider selling is a cause of concern in some cases. However, FII shed 4% in December after India announced restriction in sugar exports. Now that's reasonable because this is going to be a revenue loss as the domestic sugar is cheaper by 40% than the global rates. And with no expect, that's less money coming into the company. Now with every great investment comes really some noteworthy risks. For Balrampur, it is a high cost of raw materials and different minimum its FRP, MSP, state advised price, they're all going to impact its margins. Government has ethanol production targets and any reduction forces the firm to move away from its profitable distillery business. Any lack of rain or disease in the current cane variants can give supply chain shocks. And finally, the concerning thing is that all the firm's factories are in UP. So that builds in the geopolitical risk of any kind of disruption that can happen in the state and it will impact the production across the factories. With that, the most awaited section, or at least what I think is important, is this valuation. This is my football field. You have seen it earlier. अगर आप equity research targets देखें तो their low is 467 and goes as high as 560. When I ran the relative valuations and looked for the trading comparable, I used Renuka Sugar, EID Perry, Dhanfruit Sugar, Dalmia Bharat, among others. Relative valuation is coming out high between 445 to 578. So definitely undervalued by an industry perspective. I'll also add in that the stock is trading at a PE of 13, which is on par with the market. Its book value is around 156, which is in fact lower than its current price of 370. And अगर आप एक intrinsic valuation देखें तो DCF, the price comes out to be between 550 and 640 and have used the discounted cost of capital of WACC of 9.8% and a long-term growth of 6.5%. So stock is definitely undervalued at the moment with a potential upside of 25 to 30%, which even the analysts are claiming. So a really good upside from a market perspective. So final thoughts. अगर आप लोगों को अच्छा लग रहा हो वीडियो तो जरूर like करना and जरूर लिखना what is the next share you want me to get into. And do not forget to click on the bell icon to get all the notifications. The goods. High capacity, diversified revenue, really reasonable valuation, and an entry into the bioplastic can chart a success story for this company. The bads, the lower sugar production which has happened due to the drought, the lower government target on ethanol, and the new FRP is all going to dent margins in the short term. But as government is committed to the 20% ethanol and gasoline by 2025, there'll be some correction in the government targets in my opinion. If you're holding it or you want to enter new, the price is right to enter due to the high upside which is there. That's all from me today. I hope this has given you a great starting point as you think about Balrampur Chini as a share. Do like the video. Please drop in comment if you like something or anything I should change. आपके comments काफी valuable रहेंगे as I continue to build this channel. In fact, Balrampur Chini was also suggested by a couple of the viewers, so thank you so much for that. Do subscribe to the channel if you haven't already, and finally, please share this with like-minded investors. Do note that I'm not SEBI registered, so these are independent views and analysis. Please do your own research too, and let me know what you feel about Balrampur. Thank you.